Hello, everyone. A voice with a lot of wisdom, experience, and faith in the future has an important message to share. It's a little bit different here, but the total cost of ownership of an electric vehicle fell below that of a gas powered vehicle about 2 to 3 years ago. Soon, sticker prices. Does that include insurance? Yes, includes insurance. Yes, and as I said, local differences. But yes, in the United States, that does include insurance. And in fact, Tesla is so sure that its cars will have fewer accidents and fewer fatalities that it's well willing to provide insurance. So yes, that does include everything. We've always invested for the long term. What interrupted what was a very nice move was a massive increase in interest rates. Join us as we try to figure out what's going on with Tesla's price, the total cost of owning an EV, and the economy. Read on to find out what she wants you to do with those Tesla shares and what secrets are waiting for us as we delve into the world of Tesla and the electric car. Revolution will explore strategies, challenges, and the unwavering conviction that's captivating investors worldwide. And as we navigate through this financial labyrinth, we'll unveil the cryptic allure of Tesla's stock with a drop, generous incentives, and a visionary's unwavering faith. Are you ready to embark on this electrifying come on this trip with us? The road ahead has many turns and twists, but it's a trip that will lead to insight and maybe even a revelation. Are you ready for the revelation? Stay tuned. Sign up now so you don't miss this exciting trip into the worlds of business and innovation. Hello, and welcome to Tesla Stock News. Let's start our journey into the world of electric cars. Tesla isn't the only thing that's being looked at. The whole EV world is. What's happening in Detroit right now may indeed affect Tesla, especially in terms of reduction if there's a strike causing potential shortfalls. However, the bigger picture suggests that this shift isn't solely due to labor disputes. It's primarily driven by evolving customer preferences. Favoring affordable electric vehicles, Tesla is at the forefront of this change because it constantly lowers prices by passing on lower costs to its customers. Some may say that electric cars are still too expensive. For example, in the UK, Rishi Sunak, the Chancellor of the Exer, decided to push back the deadline for getting rid of internal combustion engines from 2030 to 2035. This decision has caused a lot of debate about how possible this transition is, with some people wondering if consumers can really afford to switch to EVs. However, let's look at a key factor that is often overlooked in this conversation: the total cost of ownership in the United States. This view has already changed a lot. Electric cars have hit a tipping point where they are not only better for the environment, but also better for consumers' wallets. Even with insurance costs, the total cost of owning an EV has dropped below that of a regular gas-powered car. This change shows how the availability of affordable EVs is changing. Tesla, a leader in the market for electric cars, has gone one step further to make their cars more affordable. They are so sure that their cars are safe and reliable that they include insurance as part of the ownership deal. This one-of-a-kind offer not only makes the process easier for Tesla users, but it also makes buying an e-car even more appealing. It's a strong case for people who are thinking about switching to electric cars. The decision to delay the phase-out of internal combustion engines in the UK raises valid concerns about the feasibility of the transition. However, it's important to note that things are changing. The total cost of ownership has shifted in favor of electric vehicles, making them not only an environmentally friendly choice, but also a smart financial one. When we talk about new ideas and technology, ARK Investment Group is doing something different from other diversified funds like Capital Group. ARK is making plans for its path. It's based on in-depth study and a first principles approach that looks at companies ready to change industries, while traditional funds may closely follow broad benchmarks, but ARK's approach is not very linked to these benchmarks. This divergence shows that ARK is committed to diversification and believes in companies that can change the world. The big question now is whether this less diversified method will work in the next 5 years. ARK thinks that by investing in companies that are changing things for the better over the long term, it can handle problems like the recent rise in interest rates. The strategy's strength will be put to the test, but ARK is still committed to its mission to support companies that are driving disruptive innovation, even in the face of unprecedented market conditions. The market is now closely watching the Federal Reserve's actions, regardless of ground precisely in tough situations. Even small slowdowns can have an effect on customer demand, so the company needs more precise guidance and yearly goals. Also, the value of high-growth stocks like Tesla can change a lot based on small changes and growth rate assumptions. This is why investors want to be sure that these growth projections are accurate. Now let's talk about the incentives that might be needed to get us to buy. The question is whether prices will need to be changed. It's likely that Tesla will make small price cuts so that more of its cars, especially the Model 3 and Model Y, qualify for the Inflation Reduction Tax Credit. This plan could be very helpful during a slowdown in the economy. Tesla's main goal is to boost strong demand growth. To do this, they're thinking about lowering the prices of their platform over the next year. This is meant to create organic demand growth, which is a key part of their growth strategy. They want to reach an impressive 1.6 million deliveries by 2023, but let's face it, this isn't going to happen. Tesla had said before that they expected a 50% growth rate over a number of years. However, the real world is often more complicated than that. Things like global economic conditions, unexpected problems, and market dynamics can all come into play. Even though Tesla may not always keep their promises, it's important to look at the bigger picture in the fast-paced world of finance. A small miss can cause big changes in the price of a stock. Investors have to deal with this tough truth right now. When it comes to Tesla, there are two important things that onlookers should pay attention to. First, keep a close eye on Tesla's growth rate as we move into 2023. A double-digit growth rate is still expected, with deliveries expected to grow by 24% over the next year. Second, look at the profit measures. Tesla has had impressive profit margins in the past, and with production ramping up in factories like Berlin and Austin, there's room for even more improvement. In other news, Cathie Wood's ARK Investment Management reaffirmed its faith in Tesla, which was a very strong sign of confidence. Cathie Wood is in charge of ARK Investment Management, which reaffirmed its commitment to Tesla by buying more than 176,000 shares of Tesla in the first U.S. trading session of the year. This showed that they have a strong trust in the company's long-term potential. This business choice was made after Tesla's stock dropped by 12% after quarterly deliveries. Even though the company is offering big incentives to boost sales, ARK's continued purchase of Tesla shares since October 3rd shows their belief in the electric vehicle pioneer. This strategic move fits with ARK's vision for the future of technology and innovation. Now let's look at the bigger picture. Tesla, like many other companies, had some problems last year. The stock value of the company dropped by an amazing 65%. Several things led to this drop, including inflation and interest rates going up are two of the main worries. The desire for electric cars has been affected by these big-picture economic factors. Tesla has been at the forefront of this market. When we look at the bigger picture, it's clear that Tesla's story has had its ups and downs, just like the stock market. The investment decisions made by big companies like ARK Investment Management support the idea that Tesla's innovative skills and dedication to sustainable transportation solutions will continue to be a driving force in the industry. The story of Tesla's resilience and the faith of investors like Cathie Wood's ARK Investment Management makes it a compelling narrative in the ever-changing world of finance and technology. So that's it for now. We've looked into the world of Tesla and its prospects for the future. We've looked at its strategies and the problems it faces, as well as the unwavering faith shown by big companies like ARK Investment Management. We've also looked into the affordability of electric vehicles, pointing out that the phase-out of internal combustion engines in the UK is now even longer, and it's important to think about the total cost of ownership in the US. Including Tesla's models, electric cars have become not only good for the environment, but also good for your wallet. So, what do you think will happen with Tesla and electric cars in the future? If you're in the market for electric vehicles, do you think that the total cost of ownership will make or break their adoption? Let us know what you think in the comments below. Also, before we end, please click the like button and subscribe to Tesla Stock News. Thanks for watching, and we hope to see you in our next videos.